Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going to week 40 of our portfolio's performance. Week 40. 40, so much progress. This is as of today, April 26, 2025. This is on Saturday. So as always, we're going to get into our weekly numbers. So 40 weeks of doing this consistently, every week, showing you the information, showing you the portfolio, right? Every week. So here is our portfolio's net worth. Well, I'm off my game today. We're at $526.86. Again, this is as of today, April 26, 2025. Again, you see our pie chart, our individual allocations, each color representing a different asset class. Here we have our portfolio weekly data for week number 40. This is starting April 21st, 2025 and ending on April 26, 2025. We have a net cash flow of $30. That's this large spike up right here on April 23rd. Remember, every third week, we auto deposit $30 into the account. So we're dollar cost averaging every week with $10 a week. And then when the cash account exceeds $25 of those cash deposits, it automatically deposits it into the portfolio and that buys each individual asset. And we're going to show that in our transactions later. So net cash flow $30. That's what this large spike up on the chart is. We have a money weighted rate of return of positive 1.47%. So that's a good percentage return for the week. Very good for the week. Anything over 1% is great for a 1 week period for this portfolio. We have a market gain of $4.25, and we have a dividend earned of 22 cents. Pardon me. So good week. We're seeing a bit of a turnaround. We've had some bad weeks, but the overall performance is still good relative, looking at the long term. But a pretty good week. So that's our weekly data for week 40. Now we have our monthly data for week number 40. This is starting March 26, 2025 and ending April 26, 2025. We have a net cash flow of $60.63. So I have two auto deposits. The first was on April 2nd, which was right before Liberation Day, the tariff announcement, and then it immediately collapsed when everybody found out that Trump tariffed the entire fucking world all at once on one day. And then we had our second stair step right here, which is our second auto deposit, $30 on April 23rd. So those two $30 deposits together makes the $60 deposit here. We have a money weighted rate of return of positive 1.31%. We have a market gain of $6.81. And we have a dividend earned of 22 cents. So this is our monthly data, or monthly chart for week number 40. Now look at our quarterly chart. This is from January 27th, 2025 to April 22nd, 2025. We have a net cash flow of $150.87. So it's going to be 5 deposits, $30 deposits we have every time you see these stair steps. So 1, 2, 3, 4, 5. All right, 5 deposits over that quarterly period, that 3-month period. We have a money weighted rate of return of positive 2.97%. We have a market gain of $14.50. And we have a dividend earned of 99 cents. Oh gosh, sorry. Something in my throat. So this is our quarterly data for week number 40. So there's our chart, quarterly data chart. Now we have our all-time chart. So this is from the beginning for week number 40. So this portfolio started on July 21st, 2024. And the ending balance is today, April 26, 2025. We have a net cash flow of $495.24. So we have all our deposits. We have our very first initial deposit, which was $100 to open the account. And then we have every third week a $30 deposit. So this is auto deposited every third week. I do not do anything. It is done automatically. It comes right out of my cash account into this portfolio. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13. Right? So 13, 13 times $30, that's how many these auto deposits are, is $390, plus our initial $100 deposit to open the account, gives us that $490. So this is our auto deposit chart. That's why you see all these stair steps. So over this time period, on week number 40, we have a money-weighted rate of return of 12.10%, positive 12%. So that's good. We're back in double digits now. So remember when we had all this volatility back in February, then again in April with tariff announcement, this brought down the portfolio below that 10% threshold. Personally, over a 1 year time frame, 1 year, I would like to see this above 10%, but on the low end, at least above 5%. We're not going super high, crazy percentage returns, remember, because we're indexing a lot of these with these ETFs. We're doing broad-based sectors versus individual stocks. So we're trying to have a balanced and diversified portfolio. So anything over 10%, in my book, is really good. That's what I would like to see. So we're rebounding a little bit since the heinousness in the market, so we're doing okay. So over that time period, we have a market gain of $31.62. We have a dividend earned of $2.27. So this is our all-time data for week number 40. Now we do our percentages. You see on the right, we have our target weighting of each percentage. So at the top, at 35%, we have gold with our GLD ETF. Remember, we increased gold to 35% the other week because it was the only thing going up when everything else was going down. Right, gold was the only thing going up. So got scared, had to increase it even more. And now I'm pushing the upper limit of what I originally wanted this portfolio to be, which is fine. I can adapt. That's no problem. Originally, I wanted 35% to be the upper limit. Now I'm thinking 40% probably going to be the upper limit. So I'm going to sit at 35% at my high with 40% as the absolute height. Right. So before it used to be 30%, which was the highest I had gold for a long time. 35% would be the upper limit. Well, now when everything else was crashing, gold was the only thing going up. I had to protect the portfolio. So I had to increase my allocation of gold. So now it's at 35%, and I'm looking at an upper limit of 40%. Doesn't mean all 6 of these assets could possibly go up to 40%, but gold's a relatively safe asset, historically, especially over thousands of years. So I'm okay with gold being up that high. Number 2 here, second one, commodities. We have at 15%, utilizing our USCI ETF. Next, we have US dollar at 15%, utilizing the UUP ETF. Next, we have stocks at 15%, utilizing the RSP ETF. Next, we have bonds at 15%, utilizing the GOVI ETF. And last but not least, we have Bitcoin down here at a meager 5%, utilizing the IBIT ETF. Bitcoin's been doing very well recently, not this whole time. Recently, he's been doing very well. And I keep it low because the volatility of Bitcoin relative to all these other classes is stupendously higher. Right, so I can't risk having the Bitcoin allocation too high because it could drop really fast. Right, just like the stock market dropped really fast a few weeks ago. Right, but Bitcoin would be worse, historically speaking, relative to the performance of the market. Bitcoin's drops much further, much faster. All right, so here we go. Let's get into our weekly percentages for week number 40. So gold down 0.42% for a market loss of 76 cents. Gold has been giving back some of its historic gains that it's been gaining. And you'll see that on the charts. This thing has broken out. It's crazy. So it's actually just giving back some historic fucking returns. Now that it's crashing, it's giving back some of its historic returns. It's got to cool down a little bit. We have commodities up 2.76% for a market gain of $2.09. That's pretty good for commodities. Commodities are starting to come back. And perhaps this is not just inflation fears anymore. This is tariff fears. With the prices of everything possibly going up and inflating some of these assets. So we see commodities going up. We have the US dollar up 0.34% for a market gain of 26 cents. Dollar's been shit for a little while. Now it's starting to come back up just a little bit. So I don't know if this is temporary or not. We're just going to wait and see. We have stocks up 2.82% for a market gain of $2.10. So this is a good rebound for stocks. Remember, the S&P 500 sold off hard, went down to from its peak down to the low to maybe 18% drop, and then came back up. Maybe it's sitting around, I think 13% from its all-time high. We'll get out our measurement tool and check that. But stocks coming back just a little bit. Bonds up 0.97% for a market gain of 73 cents. So a little bit of a comeback on bonds. We'll see how they're going to do. And then Bitcoin, here's the good one. In 1 week, up 12.46% for a market gain of $3 on this little IBIT ETF. Interesting now, this past week or so, to see really the only assets coming up consistently. It's Bitcoin and gold. And I know people love the narrative of Bitcoin is digital gold. I don't buy that bullshit. Gold is gold. Bitcoin is Bitcoin. That's it. All right, that's it. I don't care what anyone says about that. Gold is gold. Bitcoin is Bitcoin. But for whatever reason, the market has been rewarding those two asset classes relative to these other ones. So gold's been going up, although it gave a bit of a pullback this week, and Bitcoin's been going up. I don't know why the market chose those two assets, but they did. That's all I'm saying. Next, monthly percentages for week number 40. We have gold at 9.08% for a market gain of $13.69. So it's a good month. Good month for gold. Commodities down 2.02% for a market loss of $1.70. US dollar down 3.93% for a market loss of $2.91. Stocks down 4.25% for a market loss of $3.06. Bonds down 2.06% for a market loss of $1.71. Bitcoin up 8.35% for a market gain of $2.10. So look at this on the weekly. Look how these have turned around just in this week. Look how these have just turned around. Gold's down, everything else is up over the week, and then over the month, gold's up, and Bitcoin's up, and everything else is down. So it's just really this past week that there's been a flip, right? So everyone can speculate on what the fucking reason is. I'm just showing you the numbers, right? This is the performance. Portfolio quarterly percentage returns for week number 40. We have gold up 19.20% for a market gain of $24.56. Really good return. Commodities up a meager 0.84% for 69 pennies. 69 pennies. That's what we got for commodities over this quarter. 3 months, right? US dollar down 6.56% for a market loss of $5.08. Stocks down 7.56% for a market loss of $5.11. Bonds down 1.69% for a market loss of $1.14. And keep in mind, this GOV ETF is still relatively new. We haven't even had it in this portfolio for 3 months, so this isn't a full 3-month picture. When we get to May, looks like 18th, that we'll have a full 3 months worth of data on the GOVI ETF going forward. So we're only at a little over 2 months with this ETF. And last but not least, Bitcoin down 4.57% for a market loss of $1.14. So over the quarter, Bitcoin has not been positive. Like I said, it's only been recently it's been coming up. And now we have our all-time data, our all-time percentages for week number 40. So gold up 42.21%. So this is since inception when we opened the portfolio, up 42% for a market gain of $33.38. So gold's been crushing it. Commodities up 12.16% for a market gain of $5.53. US dollar down 10.19% for a market loss of $5.41. That's over 40 weeks. The US dollar is down 10%. Stocks down 8.68% for a market loss of $3.64. So as you see, stocks still aren't at their all-time highs anymore. They haven't reached their all-time highs yet. So this is not going to be a positive number for a while. Bonds, again, we're going to skip because I don't have enough data, but we'll look at it on charts. Bitcoin up 55.26% for a market gain of $6.54. And this ETF really only came in since September of last year, so it isn't all the data either, but you can still see it's had a pretty good return. Although this is only recently that's been coming up more. We have my position changes. So since the beginning, July 21st, 2024, these are all the times I've moved money back and forth between the asset classes. Usually I do about 5%. I keep it light. The most recent one was April 14th, 2025, where I decreased my bond position, GOVI, and I increased my gold position, GLD. This is when I went from gold 30% to 35%. And then you see I have 4 position changes in April because there was so much volatility in April. This is tariff announcements. This is Liberation Day. This is the 90-day pause. This is all the shit that specifically Trump was doing that was like manipulating the market. You can say whatever you want. This dude made an announcement and the market either fucking tanked or it fucking soared during this month. It was crazy volatility. I think we're still above the 20s for the VIX for the S&P 500. We hit above 40s, I believe. I think we hit 50 actually. I have to go back and look at my slides. But we hit like 50 at one point volatility for the VIX index. So It's been a crazy fucking month. This is why I've made so many trades in 1 month. Like if you go back and look at the past, in July I only made 1 trade. In August I made 2 trades. October I made 2 trades. November I made 1 trade. January 2025 I made 1 trade. March 2025 I made 1 trade. And then April, and we're still in April, and I made 4 trades just in 1 month. So this is a crazy month. You see me moving money around this much? It's a crazy fucking month. So April's been bananas. All right, portfolio transactions for week number 40. This is this transaction date is on April 23rd, 2025. This is when a cash deposit came in of $30. You see, we bought 5 assets, not all 6. Usually we buy all 6, we put in a little money, but Bitcoin went up so much it didn't need to add any cash to it. But our gold ETF got added $9.41. Our stock ETF got added $4.97. Our US dollar ETF got $6.74. Our commodities ETF got $3.82. And our bond ETF got $5.46. So this is my portfolio transaction for week 40. It's a cash deposit. These are the ETFs that we bought. Now we have Illuvium staking for week number 40. We have our current ILV price at $15.51. So a bit of a rally coming into Bitcoin, which is good. We have our total ILV staked at 12.34 ILV for a current market value of $191.36. Pardon me. And next week, I'll likely add another $40 and I'll stake it. So currently this is our Illuvium investing. So our very first vest is only 92 days away from unlocking, which means I could technically claim this ILV if I wanted to. But again, I'm likely going to be leaving this in because I want to collect the revenue distribution. So one day if this game ever fucking takes off, which it may never take off, it could be a complete flop. But if it ever takes off and we really start getting revenue distribution from gamers, I'm going to be collecting on that. So here's all the different months that I staked. After the first initial deposit of $100, I did $40 each month. And here's the most recent one at the end of March 29th. 2.90 ILV. So those are our investing schedules. And here's our revenue distribution. So no new revenue distribution this week. Total so far we have 3 different revenue distributions claimed of 0.024 ILV for a current market value of 37 cents. And we have no Illuvium transaction this week. And that is our weekly numbers. So now we go into the charts. My voice is suffering today. If I sound off, I apologize. I'm not sick. I think I just have a bit of a sore throat from talking so much. Anyway, GLD, our gold ETF. Look at this spike. So this come down right here where it broke above our green trend. This was April 3rd. Come down to April 8th and look at April 9th all the way to April 21st. So I kind of want to measure that out. So let's go to the bottom right here and then to the top right here. So 14%. 14% over a 15-day period. So gold just rallied hard. So they see this little bit, we're pulling back. See this little bit of red right here, we're pulling back. So this is why you see a little bit of a sell this week. But remember, zoom out, at least zoom out till October 2023. Look at this chart, up and to the right, up and to the right, up and to the right, up and to the right. Right, and then it broke out of this fucking trend, just smashed out of this trend. And the gold volatility is also high. And I showed this in my video last week. I made like a little short video so people can just look at it if they don't want to watch this whole long video. Gold volatility was even high, but it was the volatility from people buying. Volatility works both ways, buying and selling, right? Buying and selling. Typically when you see high volatility, not all the time, typically you'll see a lot of selling. It's people like trying to get out of their position. But this was from gold buying. So that's why it's so volatile. So I think it's going to correct. I think it's going to come back to this trend. My hope is, otherwise we have to change it, but my hope is it gets back in this trend and it continues to go up. But I don't know what's going to happen. We're going to watch it and find out. But at the very least, this is the gold trend from October 2023 till today. Up and to the right. This is why we're at 35% gold right now. All right, gold is just a phenomenal monster. All right, now let's look at commodities, USCI. said the wrong one. So we had this big sell-off. Again, this is post-tariff announcement. Trump tariffed the world, and we crashed. And then 90-day pause, boom, came back, right? So tariff the world, crash, 90-day pause on tariffs, boom, came back, right? So we're still really high on commodities. This is a 5-year chart. This is going back to right about here, April 2020, up and to the right, like up and to the right. Phenomenal chart. I could even adjust these lines a little bit better if I wanted to. But I just want to highlight this trend right here. I want to follow. This is the most current trend because this shit was crazy right here. This is from December 21st to the peak here, which was June 22nd. So this was just a crazy like run up right here. But this is basically our trend here from July 22nd till today. So with everything we're seeing, so let's go back to July 22nd, July 2022, right about here. Right about there. We do it right there. Up and to the right. And then there's crazy volatility, tariff announcement, and then boom, shot back up. So commodities are still doing good. Commodities are still doing good, right? Again, that's inflation. In my opinion, that's inflation. So all the extra money that was printed during the COVID pandemic caused inflation, and now with pending tariffs, it's going to cause more inflation because tariff is a tax, right? It's a tax on imports. In our case, it's going to be we're taxing people importing to our country. So everything that they make is going to cost more, which means the commodities to make the things that they make are going to cost more, right? So this is why commodities, I think, are going up. Again, we're above this trend. So I do think we'll correct, even though we technically did correct with that tariff announcement, and then we went back up after the pause, but I still think it might come back down to this trend, but it might stay in this green uptrend. So it might stay in this green uptrend. We don't know what's going to happen. We're going to wait and see. But that's our commodities ETF. Now our bonds ETF. Even though bonds are still doing kind of shitty, they are still holding this trend. This is, let's see, where's the bottom at? From right here, October 2023, pretty wide moves, right? But overall, it's still in this trend up and to the right. On a 5-year chart, though, since the beginning of the COVID pandemic, this has been bonds have been horrible, right? Because they dropped interest rates all the way down to 0. So bonds were shit, right? But, and then they increased them, and then bonds really came down. And there's a lot of manipulation with rates, basically, from the Federal Reserve. But October, what we're saying, April 2020, pandemic happened, and then just boom, right? And of course, the inverse of that, commodities. Here we are, April 2020, then boom, went up, right? I've showed this before. Just the inverse of bonds and commodities, right? Commodities, bonds. Commodities, bonds, right? So now it kind of looks like we hit this bottom here in bonds, and they're starting to go up, but it's going up very slowly, right? So until this line breaks, at the very least, we're in a slow uptrend. Not too sure on bonds. I'm hoping that bond yields do come down. Not to 0 ever again. We can't have 0% interest rates. That's insane. On the 10-year, who knows what it should be at? Should, with air quotes, should. But I'm thinking like less than 3%, maybe. Maybe a little more than 3%. I don't know. We'll see. But probably not below 2%. We need like some kind of interest on yields, so there is incentive to deposit in bonds. But also lower rates means it's easier to lend money, because it's not a high rate that you're lending the money out to, or you're getting a loan from someone. So we'll see what happens with bonds, but they've been not doing too good. Dollar's been worse though. Dollar has been worse though. So this green trend is gone. I don't know why I keep it here, but I just do. And we look at it. Let's look at the US DXY. There we go. So the boom boom, right? From September 24th to the peak January 25th. This little short cycle, and then basically from that January 14th, and then from January 14th to now, it's just been coming down. Extend this arrow down a little bit more. We have this little bitty bounce right here. So I don't know if this is the start of a reversal or a trend change or whatever, but at the very least, it's a little bit of a turn. The dollar's just getting destroyed. So as a everyday person like myself, like you watching this video, your purchasing power is going down. right? There's just no way to say it. You have commodities going up because inflation got out of hand, and your US currency dollar has been going down, right? So things cost more and the purchasing power of your dollar goes down, right? So that's not good. So right now I have like these all at 15% basically because I don't know which way to go with them yet. I don't really have any good clear defined trends. It's not like gold and commodities. These are some pretty good clear defined trends, right? These are pretty good clear defined trends, like up and to the right for these. But bonds, it's starting to do that, staying relatively slow or low. The dollar is just like crapping, it's just going down. So I don't know where it's going to go next. I'm hoping it's going to bottom, start coming back up, but right now we just have to watch and wait. And then stocks. We had this big, huge trend going back to August 2022. And then, tariff announcement came. Where are we at? Where's tariff announcement? April, right? No, right about here. This is tariff announcement. Boom, let's drop right here. All right, the market was already coming down, but April 2nd happened, and then just boom, tariff announcement. And then 90-day pause, right? A reversal. But look where we are at for all-time high, which is way back here, to where we're at right now. So still down 10% from all-time high. If you go to these closing candles, if you really go down all the way to the bottom, it's basically a 20% drop from like the absolute highest point of the candle at the peak to the lowest point of the candle on the drop. It's about 20%. Right now we're sitting about here, so we're sitting about 10%. So 10% down from the all-time high, right? So what is it on the S&P 500? Let's look at that. So we have basically our peak here, right around here. Yeah, I see that 20%. So this is 20% from the absolute peak to the absolute bottom. And then if we go from where we're at right now, about 10%. So still 10% from all-time high. So my portfolio, I'm already back at my all-time high. My percentage return and everything is already back. So I got hit just like everyone else got hit. Like I showed you the charts and stuff. All right, like where's a good example of it? Here we go. So this peak right here, this was tariff announcement. This is where my shit took a hit, and then I was down, and then I started coming back up. Then even after my first auto deposit, I'm already back up. But like this trend was already coming up. So I was mostly in gold. That's why. People that were all in on stocks, like you're still down. Like look at this, you're still down. Right? You're still down. You haven't recovered yet. I've already recovered, but you haven't recovered yet if you're all in stocks. So that's why I have the different asset classes, right? So I can move in between them. And I'll put all my money in stocks and I'll put all my money in one thing. But right now, the stocks are not doing good. I don't know if there's going to be recovery. I think people are still very skeptical. What's volatility at right now? So the VIX is at 24. So it's been coming down. You see it coming down, which is a good sign. But still like above this blue line, the 20. Because everything you see below this blue line is like these scoops, right? This is when like the volatility is the absolute lowest. These like low scoops. So that's when like usually the market's going to be at the absolute highest. But we're still coming down off of this super high volatility today. This is post-tariff announcement, April 2nd, just post-tariffs, boom, and the 90-day pause comes down, right? So very, very high volatility. And the Bitcoin, interestingly enough, let's put this. So here we are, April 9th to April 28th. So over 20 days, Bitcoin's ramped 22%. I don't know what's causing that, but all of a sudden it's starting to turn around now. All right, so Bitcoin is turning around. I don't know why, but it's starting to turn around. Now, if we look at it, where's my Bitcoin chart? Look at it on a 5-year, or more than a 5-year. We still see our decade-long trend line, right? Where we had our multiple peaks. We're still far from that trend line, right? We still got a ways to go to get to that trend line. To get to it right now, if we were to go straight up from here, we have to be about 103,000, call it 105,000 to get to this line. So we would need $105,000 Bitcoin just to reach this line. Not even break it, just to reach this line. So we don't know what's going to happen yet. We don't know if the trend's reversing. It's a bit of a reversal. We'll see what happens. But Bitcoin right now is definitely finally came back. On that weekly chart, where's it at? that right there. On that weekly, it's up 12% in 1 week. 12.5% basically in 1 week. 1 week, 12.5%. So it's really had a strong move. So I don't know what's going on in the Bitcoin world, but it has turned around. So our little 5% has been making some good money. And that's basically it for weekly numbers. So every week, right, we go over the numbers, we review, show the changes in the portfolio, why we're in the different assets. You know, my portfolio is basically back at its all-time high. Everyone else is still down. Like, even if the market's up, they're still down because they're not back to their all-time highs yet. I'm already at my all-time highs. You know, I don't get crazy volatility on the upside where I get crazy high returns, but I also don't get crazy volatility on the downside where I lose a lot of money. So I'm trying to maintain a steady pace up and to the right. So I'm already back at all-time highs. That's great. I'm happy about that. And I hope my portfolio basically follows that trend forever. Just creeping up little by little, staying near my all-time highs. And if I get a 10% plus annual return, I'll be a happy camper. So anyways, as always, I hope you enjoyed the video. If you enjoy the content, let me know. If you have any questions, comments, or criticism, just throw them in the comment section. I'll get to answers. And as always, thank you for watching. Have a good day.